Now I would like to get into the mechanics of how the tax deduction works. This is technical. Fellow CPAs and business valuators will be following along just fine. But individuals, pass-through entities, and corporations can take advantage of this tax deduction if it's an individual or pass-through that's coming through on a K-1 with a pass-through, for example. These are on the 1040 Schedule A, itemized deductions. You have the medical expenses, which are rarely used on the Schedule A. You have the state and local taxes. Remember that the OBBBA just increased that SALT cap to 40 grand for the next year. And then you have the mortgage interest, and then you have the charitable contributions. So it's that portion of the Schedule A. It is a non-cash charitable contribution entered into the same place that you would have a Goodwill donation or where you would donate fine art to a museum. An IRS qualified appraisal is required for donations that exceed aggregate value of $5,000. Remember, there is a fun provision called the grouping requirement. So if you donate rare books 3 times a year, 2,000, 2,000, 2,000, that last donation triggered the need for having a qualified appraisal for all of the books that were donated throughout the year. So watch the grouping requirement. If you donate deconstructed materials in January that are worth $3,000, and then you donate some more renovation materials in December with another $3,000, it will be disallowed if you do not have an IRS qualified appraisal. Here's where that deduction is taken. The Form 8283 is required. The limitation here is 50% of AGI with a 5-year carry forward. Corporations take this deduction differently. It's on their 1120, and it's a 10% limit on net income with specific add bags, dividends received deduction, some others, which I get into in a lot more detail on our articles on our website. So AD 283 was updated for 2023, and they dropped this on us back in 2023 in January, which meant that a best practice was going back and retroactively completing all AD 283s, again, using the updated form. Based upon everything that we're reading as CPAs and tax attorneys, there will be most likely an updated AD 283 form coming very soon, especially with the changes that will be starting in 2026 for non-cash, which is a floor that I will do its own video on it because it's quite important. So AD 283 is critical. These donations fall under something called DEFRA compliance, which means there is strict compliance to filling out this form correctly. And we have tax court precedent-setting case, Laube v. Commissioner. The entire deduction was disallowed on a technicality because the taxpayer had not properly filled out Form 8283. So the IRS did not need to get into the merits of the appraisal. It can be disallowed on a technicality. So this has to be filled out absolutely correctly. And we spend a lot of time with clients, so we've created some guidance to give to CPAs because with the OBBBA and tax court cases, the current Internal Revenue Code is tracking to be over 76,000 pages. And a lot of taxpayers don't realize that when you sign any of these tax forms, you're attesting to the IRS that you do, in fact, understand everything that you just signed, which is within those 76,000 pages. And other CPAs know a heck of a lot more than I do about certain areas of the tax code. This is an area that I study, and having this company for 6 years, and I'm always happy to help other CPAs to make sure that this is not disallowed on a technicality. This is more of the 8283, that cost basis. Box F is critical, and again, I can provide tips, and we've created some of our own publications that walk through that as well. 8283, the donee acknowledgement and the appraiser, very important. If you see that box, part 5, very important that the nonprofit knows whether they will click yes or no on that section. And this shows the mechanics where if there's an FMV of 18 grand and the taxpayer's effective or average tax rate is 30%, There's also some states, and again, there's an article on our website that lists all of the states that allow the non-cash charitable to be added to that, and states that don't. For example, if you donate in Illinois, that cannot be added. If you donate in Wisconsin, it can. So this would estimate that if they donated 18 grand in FMV, that they would have an after-tax benefit of $6,300, corporate tax rate, which has been codified again in the OBBBA of 21%, net tax benefits $63,000. Super important here is that you have to have basis in the asset, and you can't be precluded from capital gain treatment, meaning that if this is ordinary income property, if this is inventory, you can't donate this at FMV. You are limited to basis. And if it's been depreciated as well, then you're limited to that basis of depreciation. So it doesn't always work, especially for corporate entities who have depreciated things and who are limited to that basis. Like I said, there's that basis, the 1-year holding period to achieve long-term capital gain. Otherwise, you're limited to basis. Dealer versus investor is very important. Definitions are found with the IRS. And again, I have a lot of publications that we've written that go into this in detail. Back-end basis adjustment to the improvements. So there's no double dipping. If you donate a portion of this rental property, you're giving away a portion of that basis. And when you go to sell it, you've widened the gap on that delta that will be taxed. And like I said earlier, 50% of AGI for individuals and pass-throughs, 10% for corporations, 5-year carry forward for both. And I will also do a separate video just on the changes in the OBBBA and that floor on non-cash and what that means.